Forex Trading Unlocked, and we are here on April 29th, 2020 with a daily Forex market analysis and live trading breakdown for you. Let's pull up our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. So with that, now let's go and get to our live action screen here on the www.forex-trading-unlocked.com website. We have the dollar index chart already pulled up. Now, as you can see, the dollar has continued to retreat a little bit over the past few sessions, hitting some key support yesterday, but settling, even though lower, but in the upper part of its range. So the dollar is showing a little bit of weakness, but as a whole, it's basically setting up for consolidation right in front of this Fed day that we are encountering today. So let's see what's going on with the euro US dollar. As you can see, the euro has continued to push a little bit higher. It has not taken out the high from yesterday. Yesterday it made a higher move high and settled lower. But today we're trying to make a challenge of resistance once again in front of this Fed number. So we'll see how this unfolds. Right now on an intraday basis, short term, we are slightly bullish, obviously, because we're a little bit bearish the dollar right now. And we shall see what goes on with that as the course of the next few sessions unwind. But right now, the rally is seen as a corrective rally. Remember, this market has been making consecutive lower move lows and lower move highs, which is indicative of what? A downtrend. So this is a corrective rally that we're looking at right now. We're looking for probably not much difference from the Fed today. I don't think that there's going to be anything shocking as far as what they're doing. I think that you've seen the dollar basically fall off the lower part of a resistance band that is containing the dollar index and also helping to give support to the other currencies versus the dollar. And now I think what we're going to do is see how much support they actually can get before the dollar comes back and becomes a bull again, or at least a neutral to a neutral outlook, because that, as far as the dollar becoming bearish right now, I think we still have another few months ahead of the curve before we can really get into that. So let's look at the British pound US dollar, since this is the second biggest weight next to the euro in the index. And look at this. As you can see, volatility is pretty much dried up. We're almost an inside day today, only slightly higher on the day from yesterday. We did establish a lower move high, but higher move high on the intraday basis. Today we are on below that high, and we're settling just a little bit positive on the day, waiting for this number, and we'll have to see which way we go, if it's a breakout to the upside or the downside. Key thing to take into account, though, is that we do have a head and shoulders formation that is forming here. So let's see what's going on. So if you take this little line here, this would be our neckline. You have a good chance at setting up our release to the downside. So above this upward sloping yellow line here, we have the market pressed for neutral to higher, looking for a challenge of the last higher move high from a week and a half ago. But any failure of this upward sloping yellow line will have us pressing support and testing new move lows, in which case then this head and shoulders will have us targeting back down towards this 120 to 118 area. So is that going to happen? Well, we don't know. Let's see what goes on with the Fed day, but right now we're waiting on a signal, and we have basically, just looking at this is big sideways, which is really hard to get a grasp on, and I think range traders are going to pretty much be the ones that are profiting over the next week or two still. As you can see, the US dollar Swiss is in a big consolidation trade too. Over the past 5 sessions, you can see it's been basically trading between 97.07 and 98 even. So a $1 range is where this now, which is actually pretty big for the Swiss on any given time period, but with volatility what it is and how it has been, this is getting back to a little bit of normalcy. So, but as you can see, we haven't really buffered the highs. You can see how this has become resistance here. Support obviously is down here in the 96 area. So a little bit wider of a gap here still to go as far as how much range you have to bobble around in. But that's pretty much what we're looking for. We're not looking for any excessive breakout to the upside for dollar strength right now, obviously, because we're looking at the currencies to be centralizing and containing themselves. And if that is the case, then this is the buffer here, this resistance, and now we're looking to basically drift a little bit lower and kind of just meander around for the next month or so. And I hate to say it, but this is probably what we're set up for. So if you basically do a direct reflection of this chart, meaning that, let's go back to right here, to this area right here. We'll make this a little dark line. So you see this line that I just put in here. So let's just say that this is our baseline, And if everything we've done since then, over the past month of April, this is our setting our consolidation range. Well, that means that more of the same is basically what we're looking for to happen over the next, month or so. Does that really mean that there's not going to be activity and volatility? No. Does it mean that the dollar is going to be stuck and not going anywhere? Not necessarily. But versus your major currencies, as these countries come back online, and if the curve stays flat or starts to decrease with the coronavirus, then there's less of a chance for any unexpected breakout or big dollar bull. That means to the upside. And then as far as to the downside, until we really start to see strength in Europe and other parts of the world, there's no reason to think that dollar weakness is really going to prevail either. So it's something you really have to be mindful of. And here's another reason why I want you to be concerned about this narrowing of ranges. Look at the Japanese yen. This has had a big consolidation itself after extreme volatility. Obviously, we're hammering the lows a little bit once again today. It's made lower move lows. The bears have been in control over this market for the past month, but it's been a grind. Even being short, it hasn't been a fun ride, and obviously the bulls have gotten this crushed on any given day, except for basically 2 or 3 in this whole month period. So, which would be these right here. So that's what we have to look at, is to see if we start to see any type of divergence of currencies. Right now we have Fed Day. I would not expect much action until after 1:15 Chicago time, and then after that, who knows? We could have a complete non-event just because what isn't factored in right now. I mean, what is the Fed going to come and do? I mean, I don't see them raising like 2 points or something like that. Like that would cause a shakeup. Is it the market if the Fed was to come in and raise interest rates? Is that happening? I bet dollars to donuts that it's not, so I just don't see that happening. And if that is the case, we're looking for more sideways as we move as we finish out the month over the next couple days and head into May, which I think, like I said, with the Swiss, we're looking for big sideways with that. Now let's look at the Australian dollar, US dollar. Now this is amazing that of all the currencies that's really pressing against the dollar, this has been in the trend since last month. It's a month and a half trend to the upside, finally breaching the downtrend, but that doesn't make this thing a bull. I know it's hard to say that it isn't a bull trend. It's hard to say that this is not going to continue to go higher, but the reality is why. I mean, this market had been, we don't need that one. This market had been in a free fall for the whole part of 2020. Now remember, this market had been chopping around last year and really was going nowhere, and then it fell off the map. See how this, when we get to here, see how this was up here, boom. This is a bear market. This is a correction in a bear market. Or we're coming to where this is going to consolidate. And this is a pretty wide consolidation that you're looking at. So I think that, it's still one of our major currency crosses, but the Australian and the New Zealand start to lean towards the lower ones. And that being said, I think you can expect that these were a little maybe overdone, so maybe that's why we have had such an extreme bounce. But then also, if we are in a consolidation phase, it stands to reason that if the dollar right now, while it's under pressure with some of those other currencies, that this might buffer resistance a little bit. But any big turn in the dollar versus the majors, I think, is going to have this one on edge. So one thing you have to look at is that the trend so far is not too steep. It's actually a pretty decent trend. However, remember, like I said, any type of break in this market will unwind. Now let's look at the New Zealand dollar, US dollar. So we've been looking at these Asian currencies, the yen, the Australian. Now we're going to get into the New Zealand dollar. This one has failed to make a newer move high. It looks like it might challenge it today. It may happen today. But look at this. We have a head and shoulders forming here. The other one, in the other market, we didn't. If we fail to take out this high and we reverse gears, taking out this last swing low, and let alone this upward sloping support line, well, what am I going to tell you then? Then all bets are off, and we're looking for a sell-off in the New Zealand dollar, US dollar. Now, perhaps there's a divergence. Maybe New Zealand dollar versus Australian dollar, there's a different thing. So let's look at that. Let's look at the New Zealand dollar versus the Australian dollar. Not doing so good. is it? So that would give us a reason why the New Zealand dollar had not made newer move highs. The Australian dollar did. So either strength is in the Aussie, not so much in New Zealand, or we are starting to see a divergence, which means Australian dollar, US dollar has the potential to rally while the New Zealand dollar, US dollar has the potential to keep on going lower. So that would be no longer those two currencies trading in tandem. So let's go look at some other currencies to get an idea about true US dollar strength and not. Turkish Lira, here we go. Once again, Turkey's not doing well as far as the coronavirus curve, but we're buffering up resistance. Is this market overdone? I don't know. This thing has been in a bull trend for, a very, very long time, and the steepness has been pretty strong. Now, here's something, considering the steepness. Let's go off of these, and let's go off of that low. So what are we doing? We're heading right into this line. Does that mean we're going to fail? I don't know. This has been such a raging bull. I think this will be one of the last markets to turn versus the dollar. So at least that's my opinion. Reason being is that I think that as long as the curve still continues to be strong in Iraq and in Turkey and in that zone of the world, that it's going to be hard for the U.S. dollar to not be a bull versus the Turkish lira. Now remember, this thing has nice breaks. So it has big corrections like this. For its market to get back down to 6.80 here and then bounce back up and make new highs is very, very possible. Very, very likely. So I'd be very cautious trying to sell into these highs. If anything, I'd be looking to buy dips. Remember, this is a very wide market for the U.S. dollar, Turkish lira, getting in and out. So unless you have deep pockets and you're really good at trading, you've been trading currencies for a very long time, I suggest you stay away. But this is a good indicator of where the dollar will go. When this eventually does turn on an extreme, that's when I think we'll start to see some really good trades coming up. So now let's look at the U.S. dollar, Mexican peso. We've been talking about a head and shoulders formation forming there for quite some time. And look at what is going on. Yesterday was a really good time to go with that sell. So we had a nice little sell signal 2 days ago, and then yesterday had good follow through, and now obviously today the market is still heading on support. But remember, this market also is one that is impacted by the coronavirus. Mexico went from just 13,500 to 15,500 from Monday to yesterday, Sunday to yesterday. So and remember, just 2 weeks ago there was 1,000 cases in Mexico, and as of yesterday we were at over 15,500. So very big jump for sure. Now if these numbers continue to escalate, then the odds of this head and shoulders manifesting is probably pretty limited. But if the curve really is flattening around the globe, and let's just put it this way: there's some people that think that we're still in the beginning stages of this. We still have another year of this going. Everything is speculation right now. We don't know what really will occur. But let's just say that we're not. What happens if actually we're through the curve already and we're seeing the residual where it's still spiking? This is the tail end of where it's spiking around the world, where everything else is starting to bottom out and flatten out. If that is the case, well, then we're definitely going to see this head and shoulders manifest. We should see dollar weakness start to come into the marketplace. And remember, on the dollar index value, it has more to move against a currency like this than it does against some of the majors. Remember, this was at 18.5 pesos just a month and a half ago. And then, boom, it just rallied from the middle of February, through March into April, beginning of April. And then, boom, we spiked high here. And we've been consolidating off of this range that was just basically set back in March. So as you can see, except for the high here with the spike high, which is the head, we've been contained between 25 pesos and basically 23.5 pesos, which now we're at the 24 mark. So we're right in the middle of that range. Also looking for support. So this is a nice little bullish or bearish little correction right now. Remember, as far as actual momentum, we're not looking for much more unless dollar weakness starts to really become prevalent. But it's hard to see. This market has been overdone, perhaps, as far as how big of a rally this is. But for the dollar really to slip versus the peso doesn't seem fundamentally or technically sound, because they haven't flattened out the curve yet. So it's tough. We'll see obviously if we have a failure of this upward sloping support line, and if we take out the low from a couple weeks ago here, this last swing low, then absolutely we'll be on the bearish path. Maybe the U.S. dollar, Mexican peso is ahead of everybody else. We don't know. We shall see. So let's look at the U.S. dollar Canada and see what's going on there. Oops, not the US dollar dad, US dollar CAD. There we go. All right, so we've looked at a couple of currencies that are starting to show us signs of some potential signals. This is another one. Well, you know what? We had this gap to fill down here. We made a lower swing move high after we had this nice buy signal a couple of weeks ago. We barely touched into our target zone. We've fallen off of that over the past few sessions. Now the question is do we continue to break? Well, we pretty much we're right at key support here. So unless we really get below this last swing low here, indicative of what? Lower move lows, lower move highs, meaning a bear market, then maybe we'll still continue to grind towards filling this gap that we have here. But like I said, dollar strength returns to the market. Does that mean this is going to take off? No. This thing's been consolidating since March, and basically at the low, from the middle to the lower part of the range, which goes along with the what's been going on with the US dollar index. So I think it's going to be contained. If we continue to see an erosion of the US dollar versus some of the other currencies, I think it's very likely that we take out this last swing low, which would help to confirm our bear trend is in place. But then as far as are we going to go down to this gap? Maybe, maybe not. I don't know. I think if anything, if you see how we've been hitting out support so far, is that I think we found our basing area, you know. So we'll see. We're waiting for a signal right now. We don't have anything, and we'll just have to wait until something manifests. So we're only a couple sessions away, and today's a Fed day, so it's a crapshoot day. So today's the kind of day it's like your 50-50 chance of being right or wrong. You're going to have to fight the algos, and you could be right, and then all of a sudden, you know, you get just an algo run up or break that just, you know, swings the market around all radically up and down in a tight range, and everyone gets chopped up, stopped out, and the market goes nowhere. So I'd be very leery and mindful of that. If you're already in a winner, keep your stops tight. And well, if you're a gambler, well, you do what you want to do. But right now, we don't have any signals, so I don't know. Good luck with that. Yeah, we'll just have to come back tomorrow and see what happens after we have the aftermath of the Fed meeting to deal with. So, but while you have all this time to figure out what trades to take, because there aren't really many out there, why don't you read the book, High Probable Japanese Candlestick Patterns? It's available on Amazon.com in paperback and Kindle version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. This works in Forex markets, futures markets, stock markets, option markets. I think you get the gist of it. It works in all kinds of markets. Read the book, see how the examples work, see how correlative trades can help you in other industries and other sectors. There's lots of valuable information there, and especially since right now we don't have any trades to take, read the book. So with that being said, I want to thank you very much. Please subscribe to our YouTube channel, Forex Trading Unlocked, and check us out every day at www.forex-trading-unlocked.com. Thank you very much.